Even 24 hours ago, it was unimaginable that the UK could pass this referendum. That's why traders and investors were so poorly positioned for this event. That's why we're seeing this massive surge in volatility today. That's why complacency was so high and stocks were running up going into this. Now, one of the consequences, the knee-jerk reaction that we saw today, was a surge in the U.S. dollar. Now, it might sound like a good thing to have a strong currency, but if you're a big U.S. multinational trying to sell goods and services overseas, it's going to be more difficult and it's going to mean less profits, which is going to weigh on U.S. stocks in the second half of the year. So it's not all good news to have a really strong currency on a day like today.
Okay, so connect the dots, though, for us. I mean, we just talked about the fact that it's going to be a minimal impact in terms of trade with the U.S., in terms of the economic story for the U.S. Is the 600-point sell-off truly warranted?
You know, Maria, the timing could not have been worse for this event. Look, it's a Friday going into the summer. Liquidity is already challenged. It's the end of a quarter, not when you want to have big new information presented. And of course, it's an index rebalance for the stock index today. So again, lots going on in one day, which exacerbated that volatility. If history is our guide, big currency moves are not a one-day event. They can last several days as investors absorb the impact on corporate earnings. Sure, for small U.S. companies, it may be a gross overreaction, but for many companies, there will be some reaction. It's going to be messy and disruptive over the next few months. The U.S. economy will be the safe haven, but not without implications and not without concern.
Final question for you, and that is about volatility. We hear a lot about the VIX index. One trader today said to me that's what he's focused on in terms of the catalyst on when to get back in this market. He says once volatility gets all the way up there, much higher than we saw today, he wants to be a buyer of stocks. What's your catalyst?
It's a great point, Maria. And obviously the old adage on Wall Street for investors and trading pits was when the VIX is high, that volatility index, it's the time to buy. And we did see a massive spike in volatility today, something we hadn't seen in some time. I would also add that going into the weekend, investors are very concerned there could be another shoe to drop. That next shoe could be another country in the EU talking about their own referendum, leaving the EU. So you can see the EU under pressure for other reasons, as this is the gateway, and investors will see this, seize the moment, and move towards rebellion. So the financial markets are going to be closely watching how we open Monday and what news is presented over the weekend and what the implications are for volatility as a whole.